Hello friends, welcome to this session, how to earn more than 30% annual return. So, does this excite you? If yes, then let's proceed. I will explain to you step by step how you can earn more than 30% annual return. So, let's get started. Before that, I am Sumit. I'm a consistent profitable trader and I earn more than 30% return from share market. Okay, and I can also help you do the same. So in this video, I will tell you the exact step-by-step approach, which if you follow, you can also do the same. Before that, we will see why this number 30%. Why this? So what are the other options? FD, fixed deposit. It gives us return of 5 to 6%. Mutual funds on an average gives us returns of 12 to 15%. Okay, this is the average. And business owners, they they try for this 15 to 20% annual growth rate. So this is what they expect. So if we can earn more than 20% annual return, that would be great. That would be great. If we can do it consistently, then that is great. Very big achievement. So in this video, I'll be telling you how you can make this more than 30% annual return without any experience. No experience is required. I will teach you how you can do it. If you implement it, you can do it. No qualification required, no experience required, and you have to give a bare minimum 5 minutes per day is sufficient for you to do this. So with this context, we start this session. Okay, so what is the vehicle or what is the medium using which we can do it? So the medium for us is share market. Share market is very much powerful, but there are very many myths around this. Like share market is gambling, people lose money here, they lose all their capital here. So these are just myths. There are people who are earning very good money from share market. And if you have the proper knowledge and if you execute properly, you can definitely earn money from share market. I'm going to tell you how you can do that. So this is our tool. We will be doing it using share market. So in share market also there are two ways. The first is investing and the other way is trading. From both the ways we can earn money. Okay. So in the short, I will tell you what is the difference. In investing, we do it for few, our holding period is the difference. If I buy a stock, say Reliance at 2000, and if I hold it for say few months, like 6 months I'm holding it, or 1 year I'm holding it, or if 5 years I'm holding it, this is investing. I'm investing in Reliance stock. Okay, but in trading what we do is our holding period is small. It can be few seconds, it can be few minutes, it can be few hours, or it can be few days. It cannot be months. Okay, it cannot be weeks. So it depends. This is how based on the time interval of holding. These are the two differences. So I will be focusing here on trading, not on investing. Okay, we will be trying this. You can do it with investing also, but I will tell you how you can do it by trading. Okay, so now this is the case. Now coming to the next point, we'll be doing it by trading share market. Trading is our tool. Now in trading also there are broadly two types. One is discretionary trading, and another is system trading or mechanical trading. So what is the difference? In system trading, no fixed of rules, no fixed set of rules are there. Everything is random. The trader, when he feels like, okay, now I should buy, now I feel like, okay, I should buy, so then he buys, he exits randomly. So there is randomness, nothing is fixed. So this is discretionary trading, and most of the people are discretionary traders. So the another one is system trading. Here there is a fixed set of rules. Rules are fixed. When to enter, when to exit, when to trail our stop loss, okay, when to scale, when to increase our position size, how to compound, everything is fixed. Nothing is random, everything is fixed. So we will be focusing on system trading. So once again, in share market is our tool, in that trading is our tool, and in that system trading is our tool. Now, discretionary traders can also make money. I'm not against it, but I personally feel that system trading is the easiest way to earn money from trading. So this is our tool. Now our tool is clear. Now I will tell you the step by step how we can achieve more than 30% annual return. So moving on to the first step. The first step is observe. The first step is observe. So what I need to observe? I need to observe chart. Chart is like, say, Reliance is a stock. So what I will do is I will observe the chart of Reliance. Chart means price action chart. It depends on time frame. Time frame can be daily time frame. It can be weekly time frame. It can be 15-minute time frame. It can be 5-minute time frame. Time frame can be different. You watch the chart of, say, Reliance in 5-minute, in 15-minute, in weekly, in daily. So what will happen is when you start observing, you will get idea. You will get an idea. If you observe for a long time the chart, you'll get few ideas. Okay, so this is the first step. First step is we observe, and we'll observe only one chart. Only one chart. So suppose you want to observe just Nifty. Nifty is an index. Nifty is an index of our market. Bank Nifty is the index of banks. Nifty is the index of everyone. Every sector is a broader index, Nifty. So suppose I say that, okay, I will watch Nifty chart only for the past 1 year on say daily time frame. So I fixed my time frame. Suppose my time frame is daily time frame. Okay, this is fixed. And next thing is I will watch it for 1 year. I will watch the chart for the previous 1 year. I will watch the chart. So what will happen is after I do this, I will get few ideas. Okay, this is the first step. So let's implement this first step on the chart. I will open the Nifty daily time frame. We'll see the last 1-2 years of chart and see what idea we can get from there. So I will open the trading view. I will now share the tradingview.com and I will share the Nifty daily chart. So let's see. So this is, I hope the screen is visible to you. This is the Nifty daily chart. As you can see here, this is daily. I have selected here daily. You can change this time frame from here, 3-minute, 5-minute. I have chosen this thing. Okay, yes, I've chosen this thing daily, 1 day. So 1 day I've selected here, and as we can see here, this is the chart which is formed. If you're new, if you don't have any idea what this thing is, just hold on. Everything will be clear within the next few minutes. So this is the Nifty daily chart. Currently, it is trading at 17,374. Okay, so what I need to do is, and this 2 lines, what I will tell you, what are these 2 lines. So I'll just annotate. This line is an average. This red line is an average, 20 simple moving average. It's a moving average of period 20. And this blue line is a 200 simple moving average. It's also simple moving average, simple moving average, time period is 200. So these are the indicators, technical indicators, which I am using here. Okay, so you can also use it to get your first idea. Okay, so now what I will do is I will observe what idea can I get. I will just observe the chart. I will just take it to the left and see what is happening here. Okay, I'm doing this. Why am I doing this? To get an idea. To get an idea of what strategy or what system can I plan here. So after observing here, see this. After observing for past 1-2 years, I'm just getting an idea here that whenever this crosses, whenever 20 moving average and 200 moving average crosses, means crossover happens, and 20 moving average goes above or below, means whenever this crossover happens, and if price is above this both the moving averages, then it further moves up. See here, this crossover happened here. I'll just, okay, we'll see this thing. Okay, as we can see here, this point is the crossover point. What happened is, see here, at this point, this is the price. So after that, what happened? Price went up, it came down a bit, and then see a big rally. Big rally. So this is my observation, that if this crosses and price is above, then excuse me, then the price can move further up. So this is my idea. And here also it crosses, this crossover, price is here and price is below. Actually price is below, and when the price is below, it goes further down. So this is just an observation. I will just see whether this holds true. I will just move this further back. As we can see here, this crossover, price again went up. This crossover, price again went up. Here crossover happened, but price was sideways. Okay, this can also happen. So this can also happen. Here price crossover, price went down, but immediately came back. Okay, fine. Here crossover, price is up, it went up. Here you can see here, this is the crossover, and the price, as you can see here, went up for a long time, as we can see here. So this can be my idea. This can be my idea. So what is my idea? I will just write it down. First step is, I observed this chart for the past 2 to 3 years, and I got an idea. What is my idea? That when 20 and 200 SMA, simple moving average, crossover happens. This is just an example. I'm giving you an example. You can design your own idea. Okay, you can have your own idea. Your idea can be different. I am sharing this idea so that as an example. Okay, so whenever this crossover happens and price is above both the moving average, then what happens? Price further moves up. Price further moves up. This is the idea. Okay, and same idea on the downside. If crossover happens and price is below both the moving average, then price further moves down. So this is the idea I'm getting. So now moving on to the next step. So this is the first step. I hope you all have understood the first step. Now I will come back to the PPT. So now coming to the second step. Second step is backtest. Second step is backtest. So now I got an idea. I need to backtest it. How can I backtest it? So there are different ways. One of the ways, I can use the bar replay button. There is a option called bar replay. Means candlestick patterns, they form one by one in front of us. Okay, so using this option, we can do backtest. We can do backtest and see after that what happens. So let's do a backtest for 3 to 4 trades and see what happens, what is happening here. Okay, so now I will again share the tradingview.com. So now what I will do is I will just move this backwards, and I will just back test it. Okay, so let's say as you can see here, this button here on tradingview.com bar replay. So I will click here and I will click on this crossover part. So let's say here is the before that, just before the crossover, I am clicking here. So see here, all the part after this is removed, and now it will play one by one. So now I will just zoom this. I will just zoom this to see, to get a better idea. Okay, so now as you can see here, it is just crossover is about to happen. So I will not just at the below, as you can see here, I will click on the play button. So one by one it will play. So as we can see here, the crossover is not happened yet. Let's wait for the crossover. Let it play. So now the candles are forming in front of me. It's a daily candle. Okay, see here on this candle. This candle price went above, but still the crossover has not happened. We'll wait for the crossover of both the moving averages. Okay, as we can see here, both crossover, they crossed here, and this is the price here, 7848. I will just write it down. You can also write it down to check what will happen. This is my entry 7848. I am buying here. Because why I'm buying here? Because price is above this and crossover has happened. So this is my buy condition now. So I'll be buying at this point, and I have to put stop loss also. If price goes against me, my loss should be limited. So I will put a stop loss also. So suppose I say that my loss is fixed. 200 point I will take risk. 200 point risk I will take. So suppose my stop loss is 200 points below. So let's see what happens next. So price is going up in our direction, went down. So we can see our stop loss is around 7850, 7650, this level. Okay, around this level. So we'll see if a stop loss is hit, or we make a profit here. Okay. So let's see, price is moving up, sideways, down, just okay. See a big green candle, and then it started moving up. As we can see here, we don't have any target. So we'll see. Okay, now next question, your question will be, where can we exit? Where can we exit? So we don't have any target. You can put the target also. Suppose I'm risking 200 points. So my target is say 400 points. You can do that also. When you get 400 points, you will exit. But my system is, suppose I don't have any target. So I exit when the price goes below, when the price closes, daily candle close below, say 20 moving average. 20 moving average means this is red line. If the price closes below this daily candle, then I will exit. Okay, till that point I will not exit. So suppose I will now play this. So price is moving in our direction. Our stop loss is very far, and 20 moving average is also very far. So candles are playing. Price is now near 20 moving average, but it did not close below. It crossed below. See here, the price crossed below this, but it did not close. Daily candle did not close below this, so will not exit. So let's play the candle. Daily closes above. Actually, price opened below 20 moving average, but it closed above 20 moving average. So our exit is not satisfied, so we will not exit. We will follow the rules. So as we can see here, price, okay, as we can see, a big gap down and price closed below this. So here we can exit. So we exited at 8088. So what is our profit? around 250 points profit we have got. Okay, so this is our first trade, plus 250. I'm just writing down. You can also write it down in your notepad. So here we exited. Okay, so now I will just keep on playing this at high speed and wait for the next crossover. Okay, so we'll wait for the next crossover. Just price is keeping on moving upwards. So now we'll have to wait. Our system or entry will be when both the crossover happens. So it might take time. Let us increase the speed. Oh, okay, 1 minute. Speed is very high. And here, I will just, can we just move back a bit? So jump to this. Okay, we'll move here. Okay, and I will click on play. So we are waiting for the crossover to happen. When the crossover happens, we will make entry. Now the price is trying to move above, but the crossover has not happened yet. Okay, yes, this is the point. This is the point here. Crossover has happened and price is below this. Crossover has happened and price is below this, so we can sell here. According to our condition, we sell at 8104 and our stop loss is 200 points. So let's see what happens. So 8300 is our stop loss. Price is going in our direction, as we can see here. Price is going in our direction and will exit when the price closes above 20 moving average. Yes, here we exit. Price is closing above this thing and we exit here 8185. So 8185 we exit. So our loss is of say 80 points, minus 80 points. Okay, second trade. Now we'll see the third trade. Now we'll see the third trade. We'll wait for another crossover. So let the price move. Okay, we need crossover. So the price is moving up. Let me increase the speed. Okay, yes, this thing. This here, I will just go to here before the crossover and I will just play this now. So yes, here. This is the point. This is the point of the crossover and here the price is at 8600. So I buy at 8600. This is my third trade. 8600 buy, my stop loss is at 8400. Okay, so now I will play this and see what will happen here. Price is moving up and we bought at 8400. Currently we are in profit. Let's see how much profit can we get from by following our system. So the rules are fixed here, no discretion. Will exit if close is below 20 moving average. Close has to happen there. Still price is above 20 moving average. Price now is near 20 moving average. It can close below it. Again, it went up. So this is giving us good profit till now, but still we are in the trade. We are in no hurry. So here, We have to wait. We have to stop it. See this candle. Okay, this is not stopped. Okay, see here. This candle closed below this. This is 9141. So 9141, exit at 9141. So I made a profit of say 540 points plus 540 points on my third trade. So this is how you can do it. The first step is observe, you get an idea, then make a fixed set of rules, entry rule, exit rule, where will be my stop loss, what can be my target, or where will I exit. Okay, so make these rules and backtest it. And how you can backtest it? By using this bar replay button. This is the bar replay button on tradingview.com. This is one of the way you can use it using. You can backtest it using Python, which is a programming language. Using that you can do it, or various other softwares are there using which you can backtest your strategy or system. Okay, so but this way is you can do it. So as we can see here, first trade we made 250 points profit, second trade we made a loss of 80 points, and third trade we made a profit of 540 points. So overall we made a good profit. So this is how system trading works, and this is how you can easily earn more than 30% annual return from trading. So now going back to our PPT. So this is the PPT. This is the second step, backtest. And after backtest, what happens is we get various modifications to a system. Suppose I say that, okay, 200 points is big. I will reduce my stop loss to say 100 points. Then what will I do? I will backtest it with stop loss of 100 points. Suppose I say that, okay, my target can be 1000 points only. If I get 1000 points of profit, I will exit. Okay, so now I have refined my system strategy, and now I am again backtesting. So third step is backtest again with the refinements and the modifications which you have made to the system. This is the third step. After that, what we do is we observe the system parameters. So what are the various system parameters? So the various parameters which are, I will write here. So what is my average winner? What is my average winner? Suppose I will take this example only. First trade, I made a profit of 250 points. Second trade, I made a loss of 80 points. And third trade, I made a profit of 540 points. So if I do the average, so my winner is, these two are my winners. Okay. So what is the average winner? So I will add this and divide by 2. So this will be around, say, 800 divided by 2 means average winner is my 400 points. So whenever I make a profit, I make a profit of 400 points. So what is my average loser? Here only one loser, so my average loser is 80 points. So I know that this data is not sufficient, but for explanation sake, I cannot take more number of trades here because it will take a lot of time. So I do that in my sessions, workshops. Okay, so my average loser, whenever I lose 80 points. Whenever I make profit, I make 400 points profit. So this is my average win. So from this, I can get my risk reward. What is my risk reward? 80 is to 400. So this is equal to 1:5. So this is my risk reward. 1:5 is my risk reward. Okay, I risk 1 rupee to get 5 rupees. It's a very good risk reward. Your risk reward should be minimum 1:2. Okay, minimum 1:2 should be there. But the problem is it's not easy. Having a 1:2 risk reward is not easy. Okay, so this our risk reward for this example is 1:5. Okay, so this is one parameter, this is one parameter, this is one parameter. So what is my win rate? So I had taken 3 trades, and out of that 2 were winners. Okay, so 2 out of 3 is my win rate. So this is equal to 66.6%. So this is my win rate. So this is also important parameters. See, win rate, risk reward. These are important parameters for me to decide whether I can implement this strategy. Why am I doing this? Why am I observing system parameters? to know whether I can implement, whether I can execute this idea, this strategy, this system. That's why I am observing these parameters. So win rate, risk reward, average winner, average losers, and number of losers in a day. Number of losers in a day. Sorry, in a row. Number of losers in a row. So here I have taken only 3 trade. So I don't know how many losers I can see back to back. Okay. So suppose my, just for example sake, I'm taking a number of losers in a row is say 5. So suppose I have backtested it. So I want you to backtest your idea for minimum 1,000 trades. Backtest your idea. I have backtested for just 3 trades. I want you to backtest it for 1,000 trades, your idea. Okay. From that, you will get a very good idea of how the system works. What is your win rate? What is your risk reward? How? What is your number of losers in a row? Suppose your number of losers in a row is 5. So you know that if I implement the system, I can see 5 losers, 5 losses back to back. Okay, so you get an idea. You are mentally prepared. You are already prepared to see 5 losses in a row. But if you don't do this, and if you see 3 losses in a row, you will be shocked. You will change your system. That's why this exercise is important. So one more parameter is maximum drawdown. What is my drawdown? What is my drawdown? What is my percentage? Suppose my drawdown is say 20% of the system. Drawdown means, suppose I started with 10 lakh rupees of capital and my capital went to say 15 lakh, 15. From here, suppose it went to say 20 lakhs, say, suppose example. And from 20 lakh, it came back to say 16 lakh, 16. So now see here, my capital went from 10 lakh to 20 lakh. It made a high of 20 lakhs. And from there it went to 16 lakh. So this fall from the top is my drawdown. So how much percent is my drawdown? 4, difference between this 4 divided by 20, which is 1 by 5, 20%. So suppose my drawdown, maximum drawdown, which I can see using this system is 20%. So this is also important because see, this parameter is the most important. How much drawdown will the system give to me? Suppose my system in the backtest, I saw that 20% is the maximum drawdown which my system can give. Then we have to keep almost twice as the drawdown. We have to keep in mind that 40% drawdown can happen. If we are prepared to see 40% drawdown, then only implement the strategy. Okay, so this is how we should be prepared. So why we do this? So that we get confidence in our system. So the reason is to get the confidence on our system which we are designing, which we are backtesting, so that we can execute it. Okay, so now moving on to the next step. Moving to the next step. So I have observed various parameters. So now if I get confidence, I will just repeat. What is my risk reward? What was my risk reward? 1:5. Okay, what is my win rate? 66%. Okay, so this is also very good, more than 50%. This is very, very good. 1:2, more than 1:2 is very good. So this is very good. This is very good. And maximum losses in a row is 5, which is okay. I can accept it. My maximum drawdown is 20%, which is slightly higher, but still okay. For example, let's say I'm okay with it. So I'm okay with this also. So now I have the confidence in my system that if I execute my system with my real capital, with my real money, then I can get the result. Okay, so now next step is execute with 1 lot. Why 1 lot? Suppose I have a capital of 10 lakhs. Suppose I have a capital of 10 lakhs. What I will do is I will execute the system not with 10 lakhs. I will execute it with 1 lakh only, 1 lakh or 2 lakhs. Why? What's the reason? Because whenever we execute in a system, there are many execution errors. There are many execution errors which come. Like sometimes our orders don't get executed. We get slippage. So many errors are there. Execution errors are there. we don't follow our rules. So for that, execute with one lot or small quantity and rectify your errors before increasing your capital. Okay, so this is how we do it. Execute with one lot. So the next step, now execute with money management. Suppose you have to do this, execute with one lot, you have to do it with for say 2 to 3 months, or we can say suppose 15 to 30 days we do it. 1 month we do it, we get the confidence, we remove our errors, we remove the execution errors, and now we are confident. Now we can execute with full capital. Suppose you want to execute with full capital, you can do it. And what risk can we take? It depends. What risk we can take? It depends. So suppose my capital is 10 lakh rupees and my risk per trade is set 200 points. So 200 point in Nifty, lot size is 50. So what is this? 5 into 10, and this is 1, 2, 3, 0. 10,000 rupees risk is there. Okay, if I trade with one lot, my risk per trade is 10,000 rupees. If my stop loss is 200 points per trade, then my risk per trade, if I trade with one lot, is 10,000 rupees. Okay, so 10,000 rupees risk on 10 lakh rupees capital. So 10k rupees risk on 10 lakh of capital, so which is 1% of my capital. So 1% I can risk per trade. It's not big, it's okay. Risking 1% per trade is good. So if my capital is 10 lakh, I can trade with one lot. I will not do two lots there. I will do one lot only. Okay. So this is how we do position sizing, and this is how we do money management. Okay. This is how we do money management and execute with full capital now, because we have got the confidence, we have done the back test, we have observed the system parameters, we got the confidence in the system, we have rectified our execution errors, and now we'll execute it with full capital, with proper money management, with proper position sizing, with the where our risk per trade is within control, and this way we can proceed. So what can be the next step? Moving to the next step. The next step comes scaling. We scale or compound. Suppose I started with 10 lakh rupees of capital and I moved it to 12 lakhs or say 20 lakhs for example's sake, 20 lakhs. So I started with 10 lakh rupees capital and I was trading with one lot because my stop loss was 200 points per trade. Okay. So now suppose my capital went to 20 lakhs. What I will do is I will increase my lot. I will trade now with two lots, because for one lot I was my capital required was 10 lakh. So now for two lot I will trade with now my capital is 20 lakhs, so I can trade two lots. So what will happen is system will be same, but my lot size increased, so my profit amount will also increase. My absolute profit will also increase. This is how we can scale. This is how we can compound our money, and this is how we can earn more than 30% annual return from share market trading. Okay, so suppose now my capital is say 100 lakhs, which is 1 crore. Okay, now I can trade with 10 lots. My profit will also be 10 times. Okay, my risk will also be 10 times. So this is how we scale. This is how we compound. So you design any system which is scalable. Your system should be scalable, which can be compounded. Your system should have liquidity. So never trade in stocks which are illiquid. Like small stocks, don't trade in them. If you want to trade in stocks, trade in big stocks like Reliance, SBI. They have liquidity. Or better to go with index like Nifty and Bank Nifty. They have huge liquidity, huge scalability. So I would prefer you go with Nifty or Bank Nifty. Better to go with Nifty. If you're a beginner, better to go with Nifty. Just observe the chart of Nifty for the last 10 years. Do the backtest for 1,000 trades and do the backtest. Get an idea. backtest your idea, refine your idea, observe the system parameters, gain the confidence, execute with one lot, and then execute with proper money management, and then scale. This is our road to Crorepati trader. And this is the system which I want to share with you in this video. So if you like this till now, then give a thumbs up to me. And after that, what we can do here. So I will share the system with you, that how you can earn more than 30% return, annual return from annual return. Okay. And this is the path. What is the path? System trading. No mechanical trading. Sorry, it is a mechanical trading. No discretionary trading. This is the tool. How we can do it? By using system trading. So now you may have a question, sir, I have a job. So I can give much time to trading. So I tell you that you can do it along with your job also. You have to just follow your system. Just when the system gives a buy call, you buy and put a stop loss. That's it. And you just have to give 5 minutes per day to observe whether your stop loss is hit or not. Okay. This you can do along with your job also. So this is a part-time job, part-time thing. You can do it along with your job also. So no need to worry about it. So this is what I have shared till now. So if you are interested to learn more, then I am coming with a 5-day class, 5-day workshop. Actually, it's a workshop where I will teach you on 5 days, step by step, how you can do it. And after 5 days, you will come up with your own idea, your own system, which you can implement with your real money. This you can do in after this 5-day workshop. So on the day one, what we'll do is, on the day one, I will make you to observe the chart so that you get an idea. This is the day one. On the second day, what we do is, I will tell you to backtest, how you can backtest your idea and do the backtest for 1,000 trades. Okay, I know that it will take time, but you'll get an idea how you can do it. Okay, this is the second day. On day two, we'll discuss this. And on day 3, you will observe various system parameters. Okay, and after that, you will if the parameters are good, you will gain the confidence. And the next step is, on the day 4, we will execute it. You will execute your system with one lot. And on the day 5, I will summarize all the things. And on the day 5, your system will be ready, which is your own system, which is not my system. Okay. So this is the path to earn more than 30% annual return. I hope you liked it. And if you liked it, then give a thumbs up to me and clap for yourself, because you have been till here, because you are a learner. I know that you are a learner, lifelong learner. You want to learn something new. You want to increase your income. You want to increase your sources of income. You want to have a passive source of income, and you can definitely do it. Okay. So this 5-day workshop, it has a value. The value of this is 10,000 rupees. Okay. I will be frank with you. The value of this is 10,000 rupees. But if you invest in it, I will give to you my video courses also. 3 video courses are there. In that, I have shared my strategies with you for directional bank Nifty, directional strategy, non-directional strategy, straddles, strangles, and different strategies I have shared there. You can go to that also. The value of each video course is 5,000 rupees. So three video courses value will be 15,000 rupees. Okay. And the value of the workshop is 10,000. So the total value workshop is 10,000 rupees. 3 video courses is 15,000 rupees. So total value is 25,000 rupees. So you will not have to do this. I am giving you a discount of, you will get it all of this for just rupees 2,999. Okay, if you invest just 2,999 rupees, if you are interested, it's not compulsory. Okay, if you're interested, with just this, you can design your own system which can make you more than 30% return annually. So if you're interested, but it's not that anyone cannot join, there's a condition here. Okay, there's a condition that if you're interested, then you will have to book a one-to-one session with me. One-to-one, I will just session you have to book with me. Okay, so in that session, which is a 30-minute session, one-to-one session, where we will discuss what are your requirements, what are your expectations, what problems are you facing, how much experience you have in trading, and what is your trading capital, how you can proceed. Is this the right thing for you, or should you invest your money in this, or should you not invest it? Okay, are you a learner? What is your attitude towards trading, or what is your attitude towards money? So we'll discuss all these things, and we'll see whether this is right for you or not. Okay, I don't want any random person doing this workshop. No, I want a person who is serious, who wants to learn, who wants to create an additional source of income, who wants to create passive source of income. Okay, so this is the condition. You have to, the link will be in the description. Okay, link will be somewhere else. Just click on that link and you will book a one-to-one session with me. You can book a one-to-one session, which is a 30-minute session with me. And after that session, then after the session only, you will be eligible for this 5-day workshop, the price of which is 2,999 rupees. So if you want to invest your 2,999 rupees in building your own system for trading, by which you can earn more than 30% return, then I welcome you. Just click on the link below and book 30-minute one-to-one session with me, and see you there. Till then, have a good time and wish you all profitable trading.